Hey, Bulls and Bears, it is Monday, January 30th, 2023, back with another dose of economic reality. My name is JJ. I am your host of this channel. Thanks for being here. Let's get right into the news. Well, the economic collapse is happening right before our eyes. We see it every day in the news that we cover. We see the sad situation of the U.S. consumer. The U.S. consumer is the driving force of the U.S. economy. Why? Because the U.S. economy is based on consumption. Basically, that's spending and people taking on lots of debt. The more debt people take on, the better the economy looks on paper because debt is chalked up as spending, which it is, but it's also chalked up as economic growth. So this economic growth that we've seen is largely based on spending and people going into debt. So now we're reaching the end of the line, the end of the road, so to speak, with so many consumers just being buried under tons and tons of debt, with the minimum payments on credit cards growing because of the rising interest rates and the higher balances, people living off their credit cards, people no longer able to borrow from their homes for the most part, with the big drop in home equity. Add on top of this the layoffs, massive layoffs that we see every day. There's more news stories of big layoffs. And one thing that we often try to do here on this channel is to see through the spin, because there's certain people out there, there's certain groups with certain agendas that want you to think things that are not true. They want you to have beliefs about the economy or the reason for the cost of living. Take a look at the story right here. This is out of Fortune. Fortune, a well-known publication. It's been out for decades. And this is a recent article. Take a look at what they're saying. Fortune, layoffs are the medicine America needs to take to break out of inflation's vicious circle. And that's the former Walmart CEO saying that. But Fortune's putting this out. They're putting out this person's opinion, this former CEO. They're putting this out as fact when actually rising wages is a very small part of inflation. Now, sure, when people have higher wages, they have more money to spend, and that creates more demand because the more money people have to spend, the more they'll buy. And then, of course, the more people are buying things, the higher the prices are going to go. So that's pretty simple, right? But to blame rising wages instead of blaming all the lending, all the easy money, all the low interest rates for one decade and beyond, for more than a decade. Also, what about the lack of production and all the jobs that were set overseas for many decades now? Right? So if you're going to blame wages, you have to go one step further. Then you have to blame the stimulus checks, then you have to blame all the other programs that give people money to spend, right? So not blaming any of those other things, but only blaming wages. So basically they're saying, like, the Fed came out, what was it, last fall or maybe last summer, the Fed came out and said, we're going to have wages slow down, or we're going to have people lose their jobs in order to fight inflation. And yes, that will prevent some inflation or prevent inflation from getting worse. If a lot of people lose their job, then they have less money to spend. So that's going to mean less demand. But what about everything else? What about all the outsourcing? What about all the ultra low interest rates? What about all the debt that's given out by the banks? All right. So this type of thinking, it's basically clown talk, right? This is just goofy type of clown stuff that people actually think that wages are the main driver of inflation. Right? How's about this? How's about not letting banks give out so much money that they create out of nothing? How about letting, or not letting? How's about putting some limits on it? And how's about not bailing out the banks when they loan out so much money that people can't pay it back? Right? That would really help fight inflation right there. But see, that's not going to happen because you have this too big to fail environment. So most of you know this, but it's just still boggles my mind to see articles like this out of a publication like Fortune. A lot of people read this and they think that this is, reality here. Now, here in the U.S., we're gearing up for another rate hike. It's likely going to be a half a percentage point increase to the Fed funds rate here this Wednesday. So in about 2 days, that's going to be February 1st. And this would make it the highest interest rate that we've seen in about 15 years. And if you remember back in the financial crisis, 2007, 2008, 2009, as soon as things started really ramping up as far as the layoffs, the job losses, the defaults, they went ahead and they dropped rates to rock bottom. So a lot of people are expecting something similar to happen this time. And we know with all the debt that's out there, especially the credit card debt, but everything combined, just the debt levels are at record highs for most people, that these rising interest rates are causing a lot of pain for so many people. And we have more rate hikes in the cards. So that's why we consistently put the message out there that this is really just getting started. And this is the point now where the debt levels are so high that even lowering interest rates, once again, it's not going to be a get out of jail free card for so many people, because once you're already behind and you can't make that minimum payment, like millions of people now are going to be doing here in the next few months, there's going to be so many defaults. Low interest rates is going to be too little, too late for so many people. And also, a lower interest rate doesn't lower your principal balance on all of these loans and all this debt. The car loans, those aren't going to go down. Maybe if a bank can refinance people to a new term, maybe another 6 years or something on their car loan, maybe that could help at a lower interest rate. But for the most part, that's not going to help, because people's credit's going to be so banged up, most people anyway, that they're not going to qualify for another loan or get refinanced. All right, so look out below, because this is going to be a wild spring/summer here in 2023. But let's get into some other news here. Wolf Richter put out another article here, wolfstreet.com. Take a look at this. And here we have a chart of subprime automobile loan delinquencies that are 60 days plus delinquent. And it seems like we never learn, because look back in the Great Recession, again, 2007, 8, 2009, how they spiked up to over 5%. And look, prior to 2020, right, things were already headed in the wrong direction, up over 5.5%, close to 6%. Then 2020 happened, and I like how Wolf Richter put the stimulus payments out, the time frames, and we see that the delinquencies decreased and dropped during those times, right? So no coincidence that 2020 happened. They put a freeze on a lot of loans and rents and foreclosures and pretty much everything that people have to pay for. They had an option of not paying for quite a long time. And then look where we're at now. We're back to where we were prior to 2020. So with all of the new money created, all the new debt, all the rescue programs, we're right back where we were prior to 2020. So none of these things help. Sure, they kick the can down the road, but we're right back where we were. And in fact, in a couple more months, we're going to go beyond where we were in 2019, where we were coming up on 6% 60-day delinquencies. And what happens after delinquencies? Well, then it's defaults, and then it's vehicle repossessions. And if you look at the stories that we put out here over the past few months, repossessions have already increased a lot from just last year. And, that's just the tip of the iceberg. The worst is yet to come. In fact, I think we're just getting started. 2023 could be the year of the vehicle repossession, the year of foreclosures. And I was going to say the year of evictions, but we've got this national rent control bill that's being looked at. And I told you things like this were going to happen. They're going to come out with bigger, broader programs to try to save people. And, a national rent control bill, it's just insane. No one would have guessed something that big coming out just a few years ago. But here we are. We talked about it a few episodes. It's really being looked at by the central planners here in the United States. Now, another piece of economic news here, recent news, is the Dallas Fed came out and they said factory output has now slumped for the 9th straight month. 9 straight months of declining factory output. That's because it's because the demand is dropping off of a cliff, because there's so many people that are just barely scraping by, living off their credit cards just to make ends meet, just to pay for necessities, that people don't have a lot of extra money to spend. Now, the thing that still makes me wonder is the attendance at all these football games. And we're going to see what the Super Bowl coming up here next month, going to be February. And we're going to see the stadium packed full of people, in some cases people paying thousands and thousands of dollars for their seats, for their tickets. And I get these emails each year. JJ, the economy's doing fine. Look at all these people that could afford to go to the football game. First of all, how many people would be at these games if it weren't for the magic plastic credit card that people can swipe and go further into debt. And I look at sports as kind of an addiction, right? People get addicted to sports. They get obsessed with sports. It's kind of like gambling. It's kind of like alcoholism. Some people are real. They live for sports and they live to go to these games. And people will steal and cheat to be able to get enough money to scrape up to go to these games. Now, a lot of people at the games are going to be wealthy people because I think people already living paycheck to paycheck should have a little common sense, not to go out and spend so much money on an entertainment spectacle that's going to last just a few hours. But common sense is not so common. So to expect people to have common sense, so really you shouldn't be surprised when you see people spending money on these types of things. The same thing with people going to amusement parks. I get messages, look at the amusement park, look at all these people, everybody's rich. No, everybody's not rich. There's another survey that just came out that close to 60% of people can't afford an emergency expense. And that's why you have to have so many of these rescue programs. That's why we're talking about national rent control, because so many people are not going to be able to make it. Right? And I don't think rent control is going to really solve anything. I think it's going to probably make things worse. And what it'll do, it'll probably drive a lot of smaller landlords out of business. And that'll actually help a lot of the bigger investment companies and investment firms come in and buy more properties from the small landlord, the mom and pop landlord that has to sell their home because they can't charge enough rent to keep up with their cost of living, with the taxes, the property, the maintenance, everything else that goes along with being a property owner. All right, now let's quickly talk about one area where we're seeing deflation, and that's the price of automobiles. And recent Tesla buyers are very, very upset. A lot of them are very distraught and upset. Tesla's big price cuts fuel owner backlash, right? I doubt anyone here watching this channel went out and overpaid for a vehicle only to find the price slashed a few months later, because we all knew this was coming. We talked about this over a year ago, how the rise in automobile prices was unsustainable and how supply was actually going to catch up with demand. And now we see these big price cuts out of Tesla. And then Ford came out and they basically matched or tried to copy the price cuts with some of their electric vehicles. And these people that bought right before the price cuts, especially if you bought just a few weeks before the price cut, you're very, very upset that you didn't just wait a few weeks. And that's why it's not good to just go out and make a rush decision on such a big purchase, whether it's a home or a car. These are not small ticket items here. Those are the top two most expensive things that most people will buy in their entire life. And you're going to rush out when prices are soaring upward and buy something, and not sit and wait for more sanity to enter. And I think what we're going to see here this year, in addition to the bankruptcy storm, is the vehicle repossession storm. But I also think there's going to be a new prevention program coming out for vehicle repossessions. I think they're actually going to put a freeze on vehicle repossessions. I could be wrong, but that's the type of rescue program or kicking the can down the road I think is likely to happen. Now, a lot of people out there are saying, no, that's impossible. We learned our lesson from 2020. Those things didn't help. A lot of people are back in the same position now. They have more debt now than even before then. But really, we don't learn from our mistakes. Do we look at all the same mistakes that we made from 2008, 2007 that we made here again leading up to these current bubbles, right? So just because they did something before in 2020, for example, that failed, for example, the rent eviction moratoriums, that didn't make rent more affordable. In fact, rents went up even faster because of it, because the landlords that couldn't collect rent from so many people had to raise the rents on the people that were actually paying. You see how this works? So if you're a landlord, you have, let's say, 10 properties, and half of your people, half of your tenants stop paying rent, are you just going to sit there and go bankrupt? No, you're going to try to get the money from the people that are paying. You're going to raise your rents. And think about a big company that has hundreds and thousands of homes. They're going to do that to all those people. So these prevention programs actually make things worse, right? I think most people here actually understand it, but we're a very small segment of the population. Most people don't understand it. They're begging for more programs to come in and save them when it's actually going to make things much worse. All right, but you and I, we can see right through this. We're ready for it, and we're going to come out on the other side of this just fine. So stick to this channel, folks. We're glad to see you here. Thanks to everybody for your support. And please let me know what you think down in comments with the delinquencies rising again on the vehicles, as Wolf Richter showed us in that chart. What do you think about the Tesla owners that are upset over the big Tesla price cuts that we've seen here just recently? But what do you think down in comments? Please let me know. We'll talk to everybody very soon. Back on this channel for more news, financial updates. Talk to everybody very soon. Bye for now. Big love and peace.